Good afternoon, everybody. My name is Pete Renzulli, Class B member, T3 Trading Group. Do a quick daily recap here, about an hour before the markets close, maybe about 90 minutes before the markets close. Early day here today. Just trading on an intraday basis, we could start to see that the liquidity, as we had mentioned in the morning call this morning, starting to dry up a little bit. So pulling myself back away from my desk. I have a few light positions on, but the liquidity dried up, so it's very difficult to get out of positions that have any size. We got a pleasant surprise where we actually opened up right at the pre-market highs this morning and continued to slowly grind higher. We had some levels on some stocks that we had mentioned this morning pop pretty well and offer some opportunity. We had mentioned, we're actually going to go right into the charts, and I'm going to compare the intraday charts to some of the daily charts and how they set up. So I guess we'll start out right here with the SPY. All right, you can see very clearly here, we were mentioning SPY at or near Friday's highs. We said that we didn't like that the volume was decreasing, and as you can see here, only 27 million shares traded at this point in the day. But if we zoom into an intraday chart, we will be able to see some really clean, well-bid movement here. We actually had 1, 2, 3 candles in a row there. We had higher highs and higher lows. Because these are 15-minute charts, you can see that the first 15-minute candle opened up, gapped above the previous day, and stayed there. But there was really nothing to do until we took out that level, which is basically called an opening range breakout. We had some nice push there through that level. So pleasant surprise here for the bulls, getting some follow-through on the gap and the outside reversal day from last week. Just to touch on a couple of stocks that we had this morning. We had mentioned Qualcomm getting up to and breaking through a level, and that's actually printing right at that level right now. We also had mentioned GLD, got a really nice pop out of GLD this morning, which, by the way, was also on off the charts last week, so a really nice job on that call by Vicky last week and Scott. OIH, we actually had called out this morning as well. We had said 2 inside days following the gap. We actually opened up above Friday, I keep saying Friday, Wednesday's high, and we're seeing some nice follow through there as well. But again, you can't ignore this here. The volume is dried up, but we are taking out the levels, light volume, heavy volume or not. Going to Schlumberger, you can see very, very clearly the same thing, although we do have the 200 just above that level. So overall, we're following through nicely here this morning. Monsanto is the last one I wanted to cover. Following through on the most recent price action, we're getting a nice push up and above most of these last couple of days. Can't read too much into it based on the fact that the volume is probably 1/3 of what they normally are. However, if you're long, still counts. If you're short, it still counts. So pushed up, slowing things down. Look, technical levels are being taken out right now. The thing that's probably going to catch some people off guard is that we're taking out these levels in a very, very quick time frame, very short time frame. I'm looking at a couple of stocks. Philip Morris, for one, we talk about, where it basically in 6 days just took out the last 5 weeks, or it's actually retraced up to resistance very, very quickly in a short period of time. So essentially what I want to say here is if you had some sell shorts on and it bounced and is taking out levels, don't try to trade out of it, because a short covering rally can happen much, much quicker than new buying. So if it trades through your stop loss, which is actually a question I get very, very often on quick moving positions, don't trade out of it. Get out of it. At the very, very least, lighten up your share size and reevaluate the position, whether or not you like it or not. But if you really think about it, if you had the stop loss in the first place and you decided that you wanted to get out and it gaps through there overnight and you didn't have and maybe you didn't get filled, just get out of the position. It's not worth trying to trade out of if you decided prior to the position you wanted to get out. Now, on the opposite side for the bulls, we are starting to see some very constructive action where we're still drifting higher. We're consolidating on lighter volume after those pushes to the upside. So next week's going to be pretty interesting and taking us into the balance of December and the end of 2012. So I think we're starting to see some buying coming in. It's going to be interesting to see if intraday we have some selling and whether or not we short the new lows and follow through, or the new lows come in and we get some buying like we had during those 2 4-month periods this year. So I don't think the picture is extremely clear right now, because you can't ignore the last 6 to 8 weeks. However, the fact that we've retraced so quickly and we've gotten up to those levels is going to be interesting. So to set up the trade heading into December and the rest of the year, if you're bullish, you want to see it push up like we're doing and flag for a few days, which, as Mark calls, a healthy consolidation up there where the stock and or the market's catching his breath. Are we seeing that right now? it's still too early in the game to see. We're only a couple of days off of what might be a short-term bottom, so we'll see. So keep your risk commensurate with the volatility and liquidity we have. If the volatility increases and the liquidity decreases, that increases the risk a little bit. So make sure that your stocks are printing. Make sure that you got some good risk points to manage. And it's going to be interesting. We'll see what happens. Have a great weekend, everybody, and I will see you on Monday. Scott will be back on Monday.
Hi, I'm Sean Hendelman of T3 Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3 Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3 Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.